Hi, I'm Nadia.
And I'm Nicole, and we're the Wealth Twins.
Today we're talking about the world of decentralized finance, aka DeFi. We're also going to hit Bitcoin and NFTs with a good friend who is also an industry expert.
We're going to give you guys the background surrounding the new world, how to get started, and different ways you can invest and participate in this new market.
The expert we're interviewing drops so many hidden gems that you may have to watch this video a couple of times to capture all of the info.
We shot this video, and guess what? We had to look at it again because every time we looked at it, we learned something new.
Yep, so if you're ready to learn about DeFi, Bitcoins, and NFTs, hit that like button and get ready to join and have your mind blown. Hey everybody, we have our friend Graham from Republic here, and he's the crypto expert, and we wanted to introduce him to you guys because you know we bring you the best.
Yep.
Okay.
And as you know, like Nadia said, if we're bringing an interview to you guys, this is going to be one of those that you want to sit down and watch the whole thing.
Yep.
You're going to learn and hear some gems being dropped, and you're going to learn from some of the people that are in the field doing the most in the field. So today we have Graham. We known him from years. You know, he's been our go-to guy when it comes to crypto, and we're bringing him to you. So with that, Graham, how you doing? Long time no see.
Oh, it is. It's been many years, but I'm really glad to be here. You know, a lot of being in crypto is spreading the love and trying to onboard new users. So let's try to download as much knowledge into your viewers' brains as possible, and hopefully it'll be very exciting along the way.
I think it will be. So Graham, tell us a little bit about yourself. Nadia and I know about you, but please tell our viewers who you are, what you do.
Yeah, absolutely. So, you know, it's a wild space. I am working full-time in crypto. My background is completely unrelated to anything high tech or finance. I'm actually trained in cinematography, photography, worked for commercial agencies shooting advertisements for a very long time.
Yeah.
And I will say, you know, there's some overlap in weird, disparate ways, but at some point in time in 2012, I was floating around on Reddit and I found the Bitcoin white paper written by Satoshi Nakamoto, which I recommend everyone reads. It's about 8 pages and it really sets the tone. And, you know, I was sitting there, my brain sort of exploding. I've always been a futurist and thought the world is going to be autonomous in the future. It's going to be based off robots. Our cars are going to be making contractual obligations between themselves in order to, you know, pass ahead or crazy ideas like that. So that's really where I got bitten by the bug. And then, you know, back in that day, it was the only way to acquire Bitcoin was to purchase it directly from someone who had mined it. So you could send a money order to Japan, which turned out to be Mt. Gox, which ended up collapsing in a really spectacular fashion. Or the thing that I'm kicking myself is being in New York, there were a bunch of really, you know, consistent hangouts at like Union Square, and you could roll up there and be like, yo, I've got a quarter in my pocket. Will you sell me a Bitcoin? And that was literally what the price was back then. So, you know, think about how much it's scaled. And then since then, you know, I got into the investing side, was still working on set, really looking at these assets, trying to, you know, reach out to the CEOs. This is probably one of the coolest things about this industry is it's extremely tight and social. So, you know, via Twitter, via email, if you can figure out how to get in touch with these people, they'll generally respond. So from there, I actually ended up, you know, having a bit of a back and forth. My college roommate went on to financial sector doing Forex, so foreign exchange, you know, currency to currency. He described to me a bit what that was, and I was like, well, if you like these, you know, currencies, you should check out cryptos. They're like that, but they're just like way more Wild West and utterly insane. And if you have some sort of traditional understanding, you'll probably kick some serious ass. So one day he called me and said, you know, I've got 2 other friends. We want to start this collective, go out and really start investing in these things heavily as a business, if you will, like a venture fund. So I walked off set that day and we launched TLDR Global. In 2017, again, crypto was this wild, wild west. We didn't understand the regulations. And as we started to creep a little bit closer to the US watchdogs being like, we're on to you guys, we had our friends at Republic, which is a crowdfunding platform. I can describe that more coming, but it is, you know, from the ground up, a legal construct. They have a firm grip on, you know, the do's and the don'ts. So we very easily settled our little business model inside of their regulatory compliant cocoon, if you will.
Okay, so Graham, let me ask you. You brought up a couple of things in there that I think maybe people might not know. Okay, so I'm going to break something.
Sorry.
Down. One, you mentioned Satoshi Nakamoto. Okay, now if you guys don't know, he's the person, the mystical person. We don't actually know his
The
name, or
mystery
we
person.
know
He,
Satoshi
they.
Nakamoto, but we don't know who
He,
he
she,
is.
they, yeah.
Yeah. Now, that person wrote, like Graham said, a white paper that's only 9 pages long, but that paper is what people consider revolutionary because it described what? Three basic things, right, Graham? We talk about decentralizing finance, blockchain, and cryptocurrency, and actually four, when it comes to Bitcoin. So if you can explain why that paper was important, why it came out, and how does Bitcoin and why do you keep calling it the Wild Wild West?
Well, let me make it more simpler so I can guide you a bit more, Greg. I want you to speak as if you're explaining it to a 5-year-old. I want you to say what decentralized finance is, why Bitcoin plays a part in it, and how, like,
Who is
maybe
Satoshi?
who's Satoshi. Put it that way. Let's
Yeah,
make
there's a
it
there's a
simple as
couple
possible.
parts here. Decentralized finance actually is a layer on top, so I'll get to that maybe last ish.
Okay.
Basically, there's been this nerd collective of they call themselves cipher punks, right? The guys looking at mostly really deep into mathematical theorems, things like that. And they've been trying to put a digital money on the internet for a very long time. So essentially, a currency that we can trade on the web without somebody being able to hack into it and just being like, haha, I've disrupted everything. And that, we essentially have a central bank in our current financial ecosystem that controls the money supply. So
Okay.
like how do we move to a digital version and forego those sorts of gatekeepers, those, those people in power, which I think we all agree tend to be old white men at this point in time, and move towards a new methodology for the digital era. And a lot of this is that, right? We've moved to digital for our information. We've moved to digital for, communicating with our families, but yet the dollar is like this relic platform. So Satoshi was very cool. He was, the founder of the idea. Basically, the nut that he cracked was this concept called proof of work, which is where you hear the electricity consumption coming into play. Basically saying that these computers are competing to solve these very complex mathematical theorems, which are basically there. If you solve it, it's agreeing that every transaction that happened within a certain time period is aligned. We all say they're true, right? So if you give me
That's
a
the
dollar,
ledger, right?
yeah, exactly. And that consensus on truth is the core of everything. If we just had transactions between the two of you and myself, but some third party came in and was like, I don't believe this, I'm going to contend that the system doesn't really work. So he created a platform where you could give me money, I could give you. The computers, the miners are verifying that and all coming to a consensus. They are decentralized, which means anyone can fire up one of these computers and start contributing to that consensus, providing
Okay.
security to the network. So that was really the nut he cracked. And then the other thing was there were some other really prominent versions out there. There was like eCash, which was coming out of Microsoft. It started to actually get some legs, but then of course, when you have an identity attached, like the founder, like the team at Microsoft, the government can come in and they can cut the head off that snake and say, we don't want you competing with money.
Yeah.
So to me, one of the craziest things and what makes the Bitcoin narrative just stand on its own in like Hollywood level, narrative, is that no one knows who this guy is. He literally dropped the idea. There's some early conversations with like the first adopters where they fire up the computers and it's only like 2 in the network at that point in time. And then slowly but surely he begins to pull himself away and he completely disappears ultimately. So there's been no, concept of this guy for a long time. A lot of theories. I mean, my assumption would be that he passed away because like you're talking about one of the richest individuals on the face of the planet, and yet they choose to just go off into
Out of it.
nothingness.
Yeah.
So it's a wild concept. It's anti-human in a way. We want to take our wealth that we build. We want to get the credit for these things, and this person just completely bypassed all of that. So
He said, hey, take the governments out. We're going to make a trust society based on not trusting, but just based on mathematical equations. And anybody can get wealth and you can keep your wealth.
Exactly. And that was really the foundation. And at the time, it was supposed to be a peer-to-peer cash. I would say it's definitively evolving into like a gold instead of a cash.
Right.
That being said, people look at these things like they're not programs that can be updated. We can always put together a proposal, and if everyone aligns on it, it can turn into something entirely new. But that's where the core came from, and of course we had these ebbs and flows for years, these summers and winters, and each one brought more adoption. Each one added more computers to the network, and at this point in time, we even have nodes circulating in space that have the entire ledger transaction. So it's pretty cool. The term would be anti-fragile. You really can't kill it. Instead of being like a unicorn, a $1 billion company, I would say it's more like a hydra. It's this beast with many heads. And if you cut one head off, somebody will see that and three more will just fire themselves up.
Okay,
So
so the
that's
ledger, that's what is blockchain. Am I right? So
correct. I
blockchain is
would say it's the big spreadsheet in the sky is the most simple description I've seen.
and the proof of work, what you said was that's Bitcoin. Let's see if we can make digital money, and that digital money is Bitcoin, right?
Yes.
Now, Graham, I know some people are not kind of understanding this. I want to make sure because I've seen some questions out there. Can you actually go and buy a physical Bitcoin? Because we've seen the coin, it's a gold coin with a nice little B on it. Is that legit? Is that real?
It's a novelty. There's no reason for these things to be physical. They're just lines of computer code. But the way you take ownership, a wallet, which is your identity on a blockchain, right? Like where does a Bitcoin go? And it's important to note the Bitcoin blockchain is just a network that is the most secure network on the face of the planet. The first application on that is digital money, which we also call Bitcoin.
Mm-hmm.
So that's something to think about, right? Like you could use the network for other secure applications.
Exactly.
But you get two keys, which are giant strings of alphanumerics, and people are trying to make them a little easier so that it becomes more like a Venmo. But for the moment, you have public key, which you send out to the world, and it's like, yo, you want to send me a couple bucks? Here's my address, right? Send it there. Then there's the private key, which is essentially the thing that unlocks your safe and allows you to send those out to other people, aka spend. Right. So those gold Bitcoins that you see essentially have the private key written on it. But you have to trust that whoever made that didn't copy that private key. And the second you buy that coin, right, just like goes onto the web, it goes ha 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 and pulls it out.
Okay,
So
yeah. So it's digital money. Keep it digital. Do not buy any actual Bitcoins, okay? People, we're keeping it digital, keeping it online because the most important part is that it's private. Because basically, like you're saying, you just have these numbers. But I would go in further than that. I would call it more like a bearer bond. Whoever holds that key, whoever holds that number is the
Has your
owner
money.
of the Bitcoin. Okay.
yes,
So you want to keep that information private and keep your, the address you have private.
It's like giving someone your bank account number and just say,
Your
hey,
passwords.
your
the
password to everything.
social.
Yeah.
Yep. And it's extremely important to remember the reason this gets us outside of the system, right, is that all of the responsibility is on you. So you've got to make sure you can't lose these numbers. I would recommend like writing them down. I never copy them digitally because there's all sorts of ways for that to get stolen. But you write it down like 1,000 times. You could get, super serious by writing down the first half and the second half and like, store the second half with your mom, your grandma or somebody like that. And make them, so that you'd have to go on this global treasure hunt in order to put it together. But a lot of people are like, well, what if I forget my password? And I'm just like, well, I mean, how much do I have to pay you to make a password worth remembering, right? Like, that's on you how deep down into the security hole you want to go. But those things are the end all be all. If you lose your private key, there's nobody that can help you get those things back. And that's why you've seen, a lot of people have lost gazillions of dollars worth of stuff because back in the day,
So,
they didn't think about it.
okay, I'm a person, I want to buy Bitcoin. How would I buy Bitcoin?
So the easiest way right now is through a centralized exchange. I'm a big fan. Coinbase was really the biggest one to come out. I think it's pretty expensive. I wouldn't suggest your users
They
go
charge
there.
a lot of fees when you're buying them.
Correct.
But it's like one of the easiest, right?
I mean, they're all pretty easy at this point in time. Gemini, I would support because they're New Yorkers. It's important to
Okay.
remember Coinbase is West Coast, Gemini is East Coast. So I have some allegiances. There's also Voyager, who I will admit I'm an equity shareholder in, but it's a really good product. I like them. They don't charge you fees, and they also pay you interest. So this is the other huge thing, guys,
This is
is
what
that
I wanted to get
Okay,
into.
wait. So I'm buying Bitcoin, right? When I first buy, I get a key of whatever thing. When I buy, I get my private key. I keep that key with me, right? Then I go to buy. Bitcoin is like $60,000. How can I buy Bitcoin at $60,000? Am I too late?
Can I buy $5 worth of Bitcoin?
Yes, absolutely. So a single Bitcoin is comprised of, I want to say, 800 million subunits, which are called Satoshis right now. I don't know. There's an argument as to what
So,
to call them.
it's like a penny, right? So it's like
Yes,
one Bitcoin. If
you
it's a
can go to
dollar, these are pennies.
you
Okay.
can go to 0.000000000 bitcoins. So 8 decimal places. So again, if you want to think in USD, you can go to any amount. You can break it up. And I would say it's not. Don't get stuck on getting a whole Bitcoin, right? That's not the idea. The idea is if you believe that this is a hard money because there's only 21 million that will ever be created, and a good 3 to 7 million have been forgotten from everyone that I just mentioned that lost their hard
Mm.
drives or whatever. And also it's digitally native. I mean, this is the thing that I can't get past with the boomer generation is they go, why would I want it to be digital? And I'm like, why would you not want it to be digital? Have you gone to a bank? Like the whole experience sucks. I do everything from my apps at this point in
It
time.
does suck.
Yeah, like we're living a digital life. Why do we have this hard stop at our monies? Um, so anyway, just to answer your question, when you buy a Bitcoin through a Coinbase or through a Voyager or something like this, they don't actually give you your private keys. They hold those things. So you're technically not in a full blown ownership position. You can
You're the
remove
custodian of your Bitcoin.
exactly. Now the upsides to that is you don't have to worry about storing your private keys and having a lot of egg on your face because you've lost your life savings. But the other flip side is that you're trusting somebody else. So for the average user, I would say that's fine. They are trusted environments. The custodian stuff has really evolved. They do have insurance through the back end. Generally, they've stored enough money in their own funds that if they do get hacked or something, they can repay it because otherwise their entire company would be destroyed. But that's the trade-off, right? Do you want the two things is that a Bitcoin that you control isn't really engaged with the ecosystem. So it's fine. It sits there. It accrues value as everything accrues value. But again, like Voyager, if you want a little more risk and a little more reward, you can hold your Bitcoin on their platform. They'll actually use it to make out, do loans, do all sorts of, it's called rehypothecation when they make investment plays with the money that you have on their platform. But they pay you pretty well for it. Right now, it's 6.6% interest, month over month. So
Now,
you have your Bitcoin, and then they just keep paying you a little bit more. And as you know, compound interest is akin to magic. So,
so what I'm going to do is just break it down for people who are watching right now. Just to put it in terms that you might understand, when we say custodian, that's like keeping your money at Citibank or at Chase and something instead of taking your money out of your bank account and putting it under your mattress. Okay. Then when they're keep your money and they pay you interest on your money that's sitting in that bank account, you might get paid what, maybe
1%.
1%, and that's high on that
uh,
end. But
I'm at like a quarter of that
yeah.
currently.
So
Yeah.
what Graham is saying, if you leave your Bitcoin with something like Voyager, you would get paid 6% interest on that Bitcoin. Why is it sitting there doing nothing as if you had your cash sitting in the bank account? So in that end, there's a higher interest being paid on the interest of the Bitcoin that you're not using. Plus it has extra security because you're not pulling it out and having to worry about having your private key. So think about it in terms of how you would use your bank accounts now. So it help you understand this new digital nature.
And now I'm just going to add something to the yield bearing assets that I think is probably the greatest adoption feature that we have right now. which
Okay.
is that as all of this has evolved, day traders want to trade in and out of their Bitcoin positions because they make money doing that, right? So they needed something to trade against. So this thing arose called stable coins. There's a variety of them, and they're essentially just supposed to maintain stability, right? They're all dollars because everyone wants to trade dollars. Nobody really cared as much about the other currencies. But now there's a variety. So the ones that are the most prominent, they literally, have a big bank account full of dollar bills, and whenever they get $1, they make one stablecoin token, right? So they're backed and all of that stuff. But these things don't go through the volatility of Bitcoin. They stay flat. That's their whole purpose. And they also pay these ridiculous yields. So again, through Voyager, you could buy one. It's called USDC. The
Mhm.
C stands for Circle. That's the company that makes
Okay.
it. And they pay 8.8%. So I've had a lot of people being like, what is my money doing in my savings account when it could just be sitting here? And again, it's
Making eight
essentially the
percent
case of
versus
guessing.
making nothing. And I can
Yeah.
tell you now, the banks are doing exactly what these Bitcoin custodians are doing. They are using your money overnight and making money off of that,
And they're not giving you
and you're not
anything.
getting any of the interest that they're paying. They're paying you nothing based on what they're making.
Okay, so with that, you're getting this high interest, even with a stable coin. Do you have some type of insurance that if you lend that money to them and you're getting an interest, what happens if they lose your money? Is there any type of insurance?
So that there is the risk, right? They don't have FDIC backing. And it's pretty interesting because to an American, that's like, ooh, that's a deal breaker. Though I will say that deal is starting to dissolve with these interest rates because you're like, screw it, I'd rather have 8%. Now fundamentally, they're coming up with their own solutions. Like I said, either they're taking some of their profits and they're just creating a fund that if they get completely run over, they can actually back it themselves. And you're seeing that being pretty common
Okay.
because again, a hack would just end their life, right? Their business would be done. But then it gets really interesting when I have many clients in Argentina who, at 40 years old, have already been through 3 hyperinflation events. So, for example, they get $100 paycheck on a let's say it's like they get it on Monday. By Friday, it's already worth 10% less, and that continues right week over week. So they already don't trust these banks. And it's really funny. We're actually seeing this in
Exactly.
Nigeria too, with the Nigerian naira, which is now like running away with inflation. So those kind of people are like, we don't care about insurance. There is nothing there. And just like with cell phone technology, with a lot of new things, they're going to leapfrog us. And they're very comfortable going into these new infrastructures, and they're getting. I mean, there's even higher yields for more risk that you take. So, there's a ton of people in Nigeria that are using these newer, less established platforms, but they're earning like 30% APY.
Yeah. Okay. Now, Graham, I like what you're talking about hyperinflation, and I'm going to bring it back so that Americans can understand something that's going on right now. Everyone is talking about the stimulus checks, right? Everyone understands that we're trying to pump money into the economy. Now, if you can relate why the original reason why, or you don't even have to, why Bitcoin was created or of the test and this whole pandemic and pumping money into the economy, what can happen? You mentioned hyperinflation, and we can even talk about hyperdeflation if you want to talk about, but how can something like that happen in America? Can something like that happen in America?
Yeah, absolutely. So, Bitcoin was a direct response to the 2008 crash. If you actually look at the first block ever mined, and again, let me just really quickly say blockchain is a transaction based ledger. So a bunch of transactions line up to say we want to be, verified as actually occurring. The chain will look at them. It only has so much space, so it fits them in there, and then it closes it down. It says these are a confirmed block of transactions, moves on, next block opens up, you do the same thing. So that's what a blockchain is. It's like a bank that's just like kind of moving along on its own. And anyone can look at these things. But the first block, they actually wrote in that New York Times headline, or was it actually, I think it was England, but it says, Chancellor of the English banking system just did some stimulus deployment. I can't remember the exact phrase, but it's a direct response to these the monetary policy which we currently have, which is you can print more monies in order to stimulate the economy. What often happens is that as they print those monies, there's a runaway effect. You inflate the supply, so the value goes down,
Yep.
and then there's a variety of feedback loops that can happen where the whole thing just starts to fall apart.
Collapsing. Yeah.
Now, America is a little different because the United States dollar is the only thing that people really trust at the moment.
Yeah.
Uh, so, we believe that we can do it, and like other people just have to kind of deal
Go
with it.
along with it.
But again, assumptions make an ass out of you and me. Never know what that's going to look like. So we've been putting so much capital in, and I feel for everybody that had pain, and a lot of people that really needed this cash. But again, it's like it's still a credit card. We have to figure out how to balance the books at the end of the day.
Oh,
So we'll see what happens. And Bitcoin's there to say, you can't make more of it. It's always going to be 21 million supply. It's the concept of gold, but built for the internet. And it's an alternative. If you want money that is really hard, that is at least going to stay there, can't be manipulated. It's really hard to see inflation in the U.S., but because like the dollar still kind of feels strong, but then you
but
go
we,
out and
we
you buy
had
milk.
inflation before, in the
Yeah,
70s, it was 20% or more. During Nixon's time, it was, these numbers went up,
We just haven't
the oil
experienced in our
crisis,
lifetime.
it happens. It's a circle, it's a cycle. And
yep.
although it hasn't happened in a while, you're in our lifetime, but it can happen. And I think we need to understand if it can happen in Argentina and things like that, something can trigger it like a pandemic. I'm not saying that it will, but something can trigger it. And we have the Fed that has to rely on that money supply and also rely on their other controls to keep that inflation from happening. But, you know, it can happen here.
So let me take a step back. A person like me, I'm very risk averse, right? If I say, okay, I understand this can happen to the dollar, I want to hedge myself a bit, buying some kind of cryptocurrency, what's the best way for me to get started? Because I don't like the ups and downs and the volatility of Bitcoin. How can a risk averse person start participating in the crypto market?
Sure. So, I mean, there are the stable coins, but again, their thesis is that they're like a dollar. So that you're exposing yourself to that volatility.
Okay.
Um, I would honestly say that the concept behind Bitcoin is the one that wins for me. And when you start using it as an interest-bearing asset, you'll kind of care less if the price vacillates, because
Exactly.
actually, if the price goes down, you'll get paid more Bitcoin in your interest. And then it is cyclical, so it goes up. And I would argue that the adoption, in 2017, everyone thought it was a bubble. You can't really give me that tulip bullshit this time around. It's actually being on, these massive balance sheets of like Tesla, for crying out loud.
Exactly.
Those guys aren't messing around. But the boring answer and the secure answer is dollar cost averaging, which is just buying a little bit over a recurring period of time. So it could be weekly, it could be monthly, but that means when it's really low, you're buying, when it's really high, you're buying, and the average is a flatter line.
But it's 60,000. Can it go higher? How high can it go?
It can
Can
go
it
to
go down?
infinity.
Hmm.
Like,
But
look,
it
the way,
has a certain amount, right? It has only 21 million. And
correct. So the farther you go down this rabbit hole, the more you detach yourself from the current monetary policies. So let's like take it a step up into DeFi, because I know you wanted to talk about that.
Exactly.
So Bitcoin, again, I guess the word would be like it ossified. It turned hard, right? It wanted to be this fluid asset, this digital
I know it's
currency,
like gold now.
and yeah, now it's turning into gold, right? So a lot of people call it the pet rock. I still love it. I think it will be the one that always holds value, but
Okay.
it doesn't do awesome things. It doesn't dance. It doesn't prance. It doesn't, do all these banking functions. So that's where Ethereum came up, which I'm sure everybody's heard of. And Ethereum is not a monies. I mean, I might get in trouble for saying that. That's a debate. But it's more of a new version of the internet. So it's using the concept of blockchain technology, but it allowed for people to build applications on top of it. Basic smart contracts. Like if this happens, then this happens. But with blockchain, you can add money into it, right? So like if this thing happens, this amount of money gets released to do X, Y, Z. That birthed DeFi, which is decentralized finance. Again, it's decentralized because Ethereum works very similar to the way I described Bitcoin. Anyone can fire up the computers that support the consensus, and they get paid for that. You can fire up just like a watchdog that records all of the, all the transactions. So if anyone tries to say something, you're like, I have a copy here that says elsewise, sir. So all of that is happening, but then the applications began to build, and they've now been building. I want to say Ethereum, it's like 2016 or something. It launches. So it's a few years old now. Like back in the 2017 bubble, everyone was investing in ideas. That was the ICO craze. Now there's actual stuff. There's a user interface. So one of the first ones was just the concept of decentralized finance, which are applications that do some sort of financial tooling. Some of the first ones we saw were being able to take out a loan. So it was like, hey, you've got Ethereum, lock it up in this contract, and you can take out a loan of one of these other currencies, which could be a stable coin. So again, that's, think about the process of taking out a loan right now to open, I don't know, a new business.
Or to buy a house.
Yep, buy a house. You have to go through all of this crap, jump through hoops. It's the banking process.
So many different middlemen.
Yep.
This one is like cut to
and there's going to be, let's be real, there's going to be a racial slant too, right? Like they're going to judge you based off of a litany of criteria that have nothing to do with just the green, which is what the system's supposed to represent. So this is just a mathematical algorithm that's like, do you actually have these assets? If yes, I will give you a loan.
Exactly.
Right? That's the real basics. Then from there, people start building. They're like, oh, so you've taken a loan. Why don't you take those loan assets and you could give them to a custodian who can then day trade them and make more money. So that's essentially what's happening. It's like a
whole new world. People,
I think Graham just glossed over something that I don't think people understood. Okay, so I think I let people know before I'm into cryptocurrency, right? And one of the reasons that I like it is not so much the Bitcoin as gold aspect, but as a new world aspect where you're not judged on the color of your skin. You're not judged on how much education you have. Is if this is how much you have, this is how much you can borrow. It's a whole new world in terms of it doesn't matter where in the world you are. It doesn't matter who you are. You can get things done. It's based on math. It's based on just, I don't want to call it.
It's built in equality.
Yeah, it's equality, a new type of equality. Okay. And
just numbers.
Yeah, there's no redlining or anything like that. So if you wanted to create wealth in this system, you can do it, right? Now, it's a very volatile system. It's a very new world. It's the Wild West, like Graham said, but you have to understand the idea behind it. Now, when it comes to Ethereum, when you call these applications, is it wrong to say that these applications can be considered like startups?
Like, yeah, no, okay. It's entirely accurate.
Google.
We are startups.
Okay, so I would consider maybe Ethereum like to help people out. Maybe Ethereum is like Google. It's you're able to get online with Google, and then you can search for different companies, or maybe it's more like
the internet itself.
It's the internet, and then you can these apps that Graham is talking about are different startups. So these are the .coms. These 100%. Apps are the new .coms. And these .coms are just caring about the crypto world and the decentralized finance world. So there's a bunch of startups that are focusing on decentralized finance that are making it easy for you to use this new cryptocurrency to do different things in this new world.
But it's not all digital either, because these are physical companies that you can't invest in.
So that's an interesting concept. They tend to start, they are physical. They usually have a human that you can touch. But a lot of them are now being built by anonymous developers on Twitter.
Exactly. They're letting go the keys.
So the weird thing here is that the goal of decentralization is to build a company and then give it away entirely.
Really?
You're not decentralized if there is somebody
that can come back
the majority of the stuff, right? Yeah, because then they get pissed at you or whatever.
They can shut down.
Or the government comes and kidnaps them, right? That's probably the most.
Happen.
So their goal, and what's really cool about all of this, is it relies on a community. It relies on the community both to operate the computers that keep the network breathing, the heartbeat pulsing. It relies on community to do governance, which this is a newer thing where they all put together proposals. These are essentially businesses wrapped in a layer of a chat room. And then everyone that participates, depending on how much of your time and energy you give, you kind of move up the threshold of your importance And then whenever they want to do any sort of action, they put it to a vote. The community at large votes on this.
Hmm.
And now they have huge treasuries. So a lot of these autonomous organizations, they're called DAOs, decentralized autonomous organizations. A lot of these funds that they raise, like $40 million, they just go into a company treasury that no one controls. It's in a contract, right? One of those smart contracts. If you do this and that, they place a vote. If that vote approves, then the smart contract will say, cool, we're releasing the money that was in that vote to go towards wherever that
Wow.
vote
You
is.
take the whole human aspect, human greed out of it. It's all about
Value
everybody's
system.
community, this
Yep.
democratic
So,
thing.
but we can go down this wormhole, and I'm not gonna let us because I know it's this is very interesting, but this is a whole different thing that we're gonna probably get you back to talk about this.
But let's talk about NFTs quick.
So this is where I wanted when you talked about communities and talking about valuing something and the whole thing about these startups. I want to get into NFTs first. Can you tell us what NFTs are?
What does NFT stand for? What does that stand for?
Stands for non-fungible token. So just to make fungible into a word that people understand, a currency is fungible. You can trade a dollar for a dollar. That doesn't change. Each dollar represents a dollar. They're not like unique. You know, if I draw a smiley face on one, it doesn't alter the value. It's still spendable. So currencies are fungible. Non-fungible tokens are literally just another wrapper on Ethereum. Again, Ethereum is like the pipelines. It's like the internet. And you can create a variety of smart contracts. So a non-fungible one is essentially a contract that says this token represents one actual thing. Let's say collectibles are the easiest, baseball cards, right? So this token represents this baseball card. It has its own unique characteristics. It has its own unique value. And because it's in my wallet, I own it. That's essentially what they are. They're being applied to art now because I think it's a pretty clear use case. You're like, this is a token of ownership for a piece of art. And then since it's digital, you can buy it and sell it in a digital marketplace. It makes it super easy, right? But ultimately, it will play a role for everything. It is an object permanence layer for the metaverse. So as we move into augmented reality and virtual reality, and we build our homes and our worlds, we're moving into a place where it's no longer like you turn off the video game system and the whole world resets. These video games are going to be always on. The servers are going to be running, and we want to build things that are, you know, real and recurring. So if I wanted a mug for my home that maybe had like a 6 skin or something, I would probably own an NFT that system would look into my wallet and say, hey, this guy owns it. It's going to sit into his house. So for art, I could take an NFT that I own, walk into any one of these digital worlds, and like throw it up on my wall because it follows my wallet. That's crazy stuff.
I know.
Mind blown.
Let's take it a step back. I was reading the article. This guy had bought a bunch of like, I guess, clips from like sporting events or something like that, sporting videos, and he paid like 175,000 for it, and now they're worth 20 million because I think he bought the NFTs and said this video highlight was this NFT. He bought them, and now they're worth so much money. How does that happen? People said, okay, this
Speculative
is only
bubble.
one.
Yes. I mean, here's I think an easier one. An artist creates a digital artwork, right? And he says it's only 20 copies I'm releasing. Now it's a collectible. Now, if you want one, you pay me $500 for it. And if someone later on wants to buy it from you, like art in the real world, the value can go up. Is that more like, so NFT when it comes to a collectible? Can you explain more like that? Am I understanding it correctly?
Yeah, 100%. They just, you know, it's like a deed of ownership. So it's a digital version. The cool thing is that you can put in, again, contractual obligations, right? It's a smart contract. So with art, it tends to be that the artist will receive 10% of any subsequent sale for the rest of that.
So the artist gets a lifetime like residual payment off
which
this.
they should have gotten before. Like, no reason why the guy that owns a Picasso gets so much money and Picasso's family doesn't get any money.
Yeah.
So that's, you know, that's a really cool structure. Digital land is a really big one. So again, in these communities where they're building these virtual worlds, people are buying like plots of land.
Oh my
There's a
goodness. I
Pokemon
don't
like game, and there's going to be central entities where people hang out. So you could buy a piece of land, and you own it. And if people, spend more time on it, maybe you have a reward for that.
Hmm.
I've seen them attached to uh, pieces of graphics that every time someone were to look at that, a server has to go through the process of generating that graphic,
Mm,
and you're sponsoring that server space, so you get paid. Meaning that every time someone sees
gotcha.
this thing, you get a chunk of change. Again, this is like a new way to think about value. It creeps into all of the internet. And this is why you're also seeing these crazy prices, right? People's paying buku dollars for these assets, and you're scratching your head. And you got to realize they're now in this Ethereum world where money, like, absolutely the last thing it is used for is for buying stuff. Money becomes extremely active. It gets locked up inside these DeFi applications. You're looking at NFTs, and you're like, I mean, most of these people are thinking in terms of ETH, not US dollars anymore,
Yeah.
because on the Ethereum network, your money can do a variety of things. It can go crazy. It can buy stupid cat NFTs that could maybe mate and become even more valuable. Who knows? Like,
Oh my
you
God.
can,
It's a
Yes.
whole new world.
so the first, like, you really cross through thresholds of understanding with this technology, but it takes a long time first to learn what it's replacing, which is very important, because a lot of it is extremely archaic. For example, if you remember Robinhood halting the trading on GameStop, right? That seemed
Yeah.
really disgusting, like they were screwing over the small man. But in reality, all of these platforms are built on our grandfather's technology. So back
Yeah,
in the
and
day
it's
when
not
they,
built to protect the smaller person anyway.
no, I mean, the tech is now outpacing also the pipes, right? They're too slow.
Exactly.
So they used to trade right on the pit with those pieces of paper. And if, like, I exchanged paper, it would take a while for us to confirm that. So they had a 2-day buffer period, which
Exactly.
those papers could, go back to the offices. The offices could write that down. They could talk to each other and say, yes, this transaction actually happened.
Mhm.
They even before that it was T plus 3. So trade
Yeah.
plus 3 days, trade plus
Yeah.
5 days, and then
Yep.
like still talking
And then
T
you
plus
cut the
3,
coupons off of the
Nadia
bonds.
and I were on the street at the time where, we actually had physical stock and we actually had physical bonds and we were cutting the coupons off
Yep.
the bond, so,
That's a
not to
crazy
make us,
concept
but
now.
yeah. We had the vault, where you had to go in and it would, search you before you came out, so yeah.
Exactly. So, Robinhood got into trouble because they were trading with a user interface that was digital and was
Yeah,
like, a
too
machine gun.
fast.
But
Yep.
the T+2 ended up creating a bottleneck, and they just got stuck where they couldn't prove that they had the assets. So, when you talk to traditional finance people about blockchain, it's all about that settlement time, that instant finality. And again, people talk about like transactions on blockchain. One of the biggest things that happens is that it's a final transaction, which is a crazy concept. Like in Visa terms, it goes through 8 different companies. When you swipe your credit card, they're checking your identity, they're checking who you are, they're checking your bank account. All of them are, grifting your data and making money off of it. Whereas on blockchain, I send you a buck, the blockchain says, yep, that's true. It's final. Somebody else could actually make a financial product that's like betting against, the fact that we are trading money or something. And they can do all these things because the data says, yes, this actually happened, unlike the legacy system, which is like, you got to wait 2 days and maybe it happened.
Now I know we're talking about the positive things about the blockchain, Bitcoin stuff, but let's talk about some of the limitations. One, those transactions you say there's a limit to how many transactions these blockchains can perform. So when Visa can process millions of transactions in a minute, right? Anyone in the world doesn't get stopped by using their Visa, right? When it comes to blockchain, you can't overwhelm the system. You know, is there any momentum to make those systems bigger to stop the wait for transaction because that comes into fees and comes into that slow transaction? Hey, where's my Bitcoin that you sent me? Like there's still very new technology with some limitations.
Absolutely. There's a litany of solutions out there. And people have tried to do it all on Bitcoin. They tried to do it all on Ethereum. Ethereum's also having the same problem. So now what we're seeing are competitors are, since Ethereum has gotten very expensive, it's like their time to shine. So there's these other concepts that are much more scalable, much faster. they're tending at this point in time to really hit specific niches. So like maybe it's all about transaction speed, but less security, right? They want to do high frequency trading or something like that. That would be Solana. That's a blockchain that does that. There's Avalanche, which wants it built itself very specifically for like robust financial applications. There's Flow, which was actually created by the NFT guys that do the baseball card, or sorry, the basketball moments.
Yeah.
And they were like, NFTs have their own needs. So we're starting to see these sectors arise. And basically everything is being done like on Ethereum right now. It'll probably pop off, do the load of work on one of these other chains, and then when it wants to, you know, confirm and get the security of these
They'll go
larger
there.
times, yeah, it'll just pop back on. So there's all these interactions happening. I would say 2021 is the year of cross chain. So they've been siloed at this point, and now they're going to start, you know, crossing over and having some sort of interaction. But everyone's
Okay.
working very hard on that.
Okay, so let's wrap it up for people and like also summarize for people. One, we talked about um Bitcoin, how that was, let's call it the granddaddy of everything.
The
We're
mother
going
coin.
to digital, the grandpa coin. We're going into a digital world. We want everybody to have access to this and we want it to be safe. Boom. Bitcoin, we show you how you can do it with money. Okay. Then you mentioned Ethereum. Ethereum says, hey, Bitcoin, I see you. But guess what? I think we can do more than just money. I'm going to take the technology you came with, along with that idea of a Bitcoin, you gave us that blockchain. With this blockchain, we can turn this into a whole nother world where trust
Internet.
is not an issue, right? So we're going to go from money to internet. And so with money and internet, now we can create a whole new world out there that just deals with whatever you want. We can put some value on it. We can do everything you want in the real world. We can do that in the digital world. And these are these new companies, these DeFi companies, decentralized finance companies. Now, with that, I just have one more question. You hear about Bitcoin, you hear about Ethereum. You have all these other coins. They're called altcoins. Should we trust these? Are these DeFi companies? Are these startup? Is that their altcoins, or how does it work? Like, what is that? Maybe is that what kind of like Republic does, or you know?
So it's exactly what you said. They're all real companies or real pieces of code with an idea behind them. It could be both, one or the other. So if you're not, you know, into what they're building and bought onto the narrative, you know, I don't care if they go up. There's a ton that are going, you know, up daily in these insane numbers. And I don't know anybody that, you know, builds on their technology or uses them. So there's no way I would put my money behind them. Versus there's some where, you know, the coolest thing about these things is they're community based. So they now tend to rally around Discord, which is a social network originally made for video games, but now is primary home. You can
Kind
see
of like
where these
Clubhouse, am I right? Is Discord kind of like this new
it's more like a
Clubhouse?
Slack.
Yeah.
More like Slack? Okay.
Yep. But if there's a company you like, you can go onto their Discord and literally see it's like stepping into the company. You can talk to all of the people operating it. You can see what governance proposals are going to be up to vote. Like, what does the future look like for these companies, right? And you can talk to them. So unlike you know, traditional finance and everything, which is super cutthroat, it's about keeping other people out, it's about exclusivity. This is all about inclusivity. All of these networks require the energy and the excitement of their participants to keep them humming, and as a return for that, you can get paid. So it's like we're looking at breaking the 9 to 5 model. If you're super interested into a niche sector and there's a company that's doing it, just like get involved. And again, all you need is the internet. So if you're a kid in Vietnam, you could be making a couple $100 a month by, you know, helping to run their community channels, just making sure that like FAQs are being answered, that users are being facilitated, things like that. And that's truly wild to me. And that also means, like, with Bitcoin being completely open sourced, and Ethereum and everything, it used to be banks were the ones that built our financial futures, but there's no reason why a 16-year-old for a science fair project can't create the next greatest financial application in human history, right?
He's just blowing my mind. So one, you can be an investor in buying coins. You can be an investor in these new decentralized companies. You can also be a worker anywhere in the world in these companies. You just have to pick something you believe in, and you can get involved. You
To
can be on a
participate.
and participate in this new economy and this new world. And anyone 16 to 60 or even older,
Even younger than
all
16.
you gotta do is have an open mind and understand how you can fit in. It's a very big thing, still Wild West, but that's also a good thing too, because it's still something that can be molded. You can help mold it.
Yeah, what we want to dispel is there's a lot of risk when it comes to cryptocurrency. But if you find your place in the cryptocurrency world, you don't have to be out of the space completely. Find a part that you're comfortable with and make sure you get involved because this is the future. This is where we're going. Make sure you're aware and not get left behind.
And it's not just about Bitcoin. Bitcoin, let's consider it stocks. But there's so many ways to get involved and benefit from this besides stocks. You got the banks, you got the stocks, you got the version of art, you got all these things. But I know I'm going to get ahead of myself. So I keep Nadia here to keep me saying,
Yeah,
hey,
I purposely keep myself ignorant about this because I want to make sure that people understand what a beginner perspective. But last question before you go, Graham. What would you tell a beginner who just wants to get involved in this? What is your advice for them to make sure they watch out for? And what is something they can start reading just to educate themselves?
Yeah, so I mean, it always helps to get your hands a little bit dirty, right? So to have some money invested, not saying a lot. It could be like $100, but that absolutely changes everyone's mindset, right? You start paying attention pretty aggressively.
Yeah.
The second thing would be like just stay curious. If you can find one of these ecosystems, and you can start following, the best way to learn is to follow the builders on Twitter, and that can be hard to identify who they are, but there's a pretty good amount of ways that you can figure that out. You can just like look at the top coins and then go to their websites and see like who's making these and get involved in their conversations as well. And then of course, if you actually want to, my goal is that your goal is to get as much Bitcoin as possible, and it's not related to US dollars because Bitcoins are going to run out, and we're already seeing these corporations that can buy hundreds of millions of dollars.
They're doing
And
it.
my position is that what you want to be able to do is pass down like one Bitcoin to your grandchildren, and you'll probably, that will be what jumps them into the 1% in the future. I see it as a legacy asset, and the interest and the yield is only starting to pick up. So I do think you buy it, you just try to get as big as of a position, and then you can live off the interest for the rest of your life.
Mm.
So that's why I try to say stop with the US dollars. That I'm not going to tell everyone to go buy it all right now. It's very expensive, and I've been telling everyone to buy it between 3,000 and 10,000 earlier in the year, so it gets a little tougher. But again, if you're just doing little bits week by week, it doesn't really matter. You're just starting to build your position, and your goal is to get in long term. Aside from that, stay curious, ask lots of questions, Google around. Don't get suckered into giant price movements because a lot of those are actually happening because they're very small markets. So people that have heavy bags can manipulate them very easily. So it went in, and essentially you're giving them your money so that they can get out. So that's really the biggest thing. It's a super engaging space. It's evolving at a clip I have never seen before. I think all of my peers are we all want the bull markets because they make you wealthy, but like they're exhausting because the learning curve is so high. But it's just an amazing pool of change, and in my opinion, there's no stopping it. Like you can't kill Bitcoin if you tried. And the rest of this is it's absolutely the future. How often do you use a landline telephone, right? It's the same with money.
Exactly.
So just get curious. The more you learn, the more exciting it gets. It ends up creating a saver out of everybody, which is kind of the coolest part. They start off wanting like houses and watches, and then eventually you're like, I just sold all my houses and my watches for Bitcoin. So it does have this really solid feedback loop. And then if you want to learn, this is definitely a difficult part, but there are a lot of great books out there. Again, I recommended Bitcoin in Black America. Really fantastic read. There's one called there's an article called The Bull Case for Bitcoin. If you Google it, it's a really interesting article, actually written in 2018, but still very relevant.
I'll link that down in the description. Yeah.
Perfect. And then it's just about trying to be present and finding some resources that you can lean on. But tons of scammers out there. So if someone tries to tell you it's get rich quick, look, I've been here for almost, I've been in here since 2016, so it's not a get rich quick play, but it is absolutely something that will build you wealth in a way that the traditional ecosystem will not. But again, we're talking long-term wealth. We're not talking, you know,
Exactly.
5 weeks.
I'll also say, so let's put a disclaimer here. None of us here are financial advisors. You trade at your own risk. You know, this is just Graham's opinion. It's our
We're given the
opinion.
information.
Your job is to do your own research. Realize that this is, like he said, this is a wild, wild west. It's not for everybody, but be curious. Get your feet wet if you want, but you are going to trade at your own risk, and be careful when you're doing this. Okay? So that was just,
100%. Yes, not financial advice. My lawyers, my legal team will love that. Yes. So that's it.
Well, Grant, we really appreciate you taking the
Yes.
time. And you know we're going to hit you up again.
Yeah, because you dropped so many gems. We're going to have to come back to certain ones. You mentioned smart contracts. We're going to, talk about that. And, we're going to get some feedback on this video and see exactly where we're going to take this next. But we appreciate your time. Thank you so much. And I know what I'm going to be doing.
I know what I'm going to be doing.
I'll be doing it just like always. Thank you so much. It was wonderful to come on here. And I hope this inspired some people, because, again, the world's just changing, and it's happening really quickly now, especially with
There's a lot of opportunity out there. So.
Yeah, so you're never too late, I would tell people. And that's what we tell people all the time. You're never too late. Okay?
Definitely not.
That's great. Thanks, Graham.
See you later.
Wow, we told you there was going to be a lot of info packed in this one, right? If you have anything you want us to clarify, just write it in the comments and we'll make sure to respond.
Yeah, if you found value in this video, show these twins some love. Hit the subscribe button and share this with someone you care about. See you guys in the next video.
See you.